Hi everyone, Logan Hertz here with Hazeltine LLC. One of the things that I've started to become known for and I want to talk more about is the importance of convertible term life insurance. So term life insurance is actually a very good solution. I do the infinite banking concept, which means I do a lot of whole life insurance, but I think term life insurance is very important, but it needs to be a certain type of term life insurance. And I think even for people who have no interest in the infinite banking concept, no interest in whole life insurance whatsoever, they still should have some form of term life insurance. And one of the things that I think people may not realize is there's actually a lot of nuance and complexity even to term life insurance. That's what I'm going to talk about today. So if you're working with an agent who is not explaining to you what your human life value is, and not explaining to you the importance of having convertible term life insurance, then maybe you need to be working with a different agent. And this is regardless of what that agent's specialty is. Convertible term, the right kind of convertible term, gives you one thing above everything else: optionality. Optionality. When you have the right kind of convertible term life insurance with all the right details, it gives you full optionality. All your options are on the table. It's like a guaranteed purchase option. So I'm going to go through today just some of the many nuances of convertible terms so you can start to understand how much value a good agent can provide for you and how much value you can get out of having the right kind of term life insurance. Okay. So if you have term life insurance in force, or you're looking for term life insurance, or if you have whole life insurance in force, it might be good for you to understand some of these nuances and consider your current situation. And if you want me to review what you have in force today, I'd be happy to do so. So again, the biggest thing that convertible term gives you is optionality. Optionality. You have full optionality. It's like a guaranteed purchase option for the future. So wealthy people and savvy investors appreciate the importance of having optionality, right? So that's the way I would describe this. So what does it do for you? If an agent gives you only whole life insurance and doesn't talk about term at all, then you might want to be looking for another agent. Now, in some cases, having only whole life insurance may be the right solution. I'm not saying that it isn't. It could be. But in most cases, a whole life insurance policy is not going to give you adequate death benefit protection. And that death benefit is very important. And that's where you need to supplement that whole life insurance policy with convertible term. And in most cases, the right thing to do is actually apply for a convertible term policy first, and then do a partial conversion to have that whole life policy in force. So you'll end up with a whole life insurance policy supplemented with a convertible term policy. So between the two, you have the full death benefit protection that you need. But the reason why, if you're working with a good agent like me, the reason why we apply for convertible term first rather than applying for two separate policies, because you can do that. But the reason to do it is just because it makes the underwriting process easier, right? It's one application, not two, and you're just applying for a term policy, which means there's less that needs to happen in underwriting. With whole life insurance, there are more questions that are asked in the underwriting process. It's not super difficult, but there's a little more to it than term life insurance, right? So we can apply for a convertible term policy, and then on day two, we do a partial conversion. We convert part of it to a whole life insurance policy. So that is a best practice. And most agents, even infinite banking agents, don't do that, which is sad. Most infinite banking agents will have you applying directly for a whole life insurance policy, which I'm not saying there's anything wrong with that. Of course, there's nothing wrong with that. And in some cases, it might be the right thing to do, depending on what kind of case design you're looking at, what company you're working with. However, in my opinion, that's not the best practice. The best practice is to apply for convertible term first and then do a conversion, whether it's a partial conversion or even a full conversion. Not in every case, of course. There are exceptions to this rule. So that's something to think about. If you're applying directly for a whole life policy, that's not the best practice, in my opinion. That's not the best practice. So if you're doing that, maybe you need to be looking for another agent. Okay. So you need to secure your full human life value. What is your human life value? Well, if you meet with me, schedule time with me, and give me a little bit of an understanding of your finances, I can tell you what it is. It's an actuarial calculation. It's not difficult. it'll tell you how much death benefit you're eligible for. Okay, let's just say the number is $3 million. Then you need to secure $3 million worth of life insurance, one way or another. Doesn't matter if it's term life insurance or whole life insurance. Yes, that does matter in the long term. But for starters, you need to secure the full $3 million death benefit, right? If you have a house that's worth $500,000, you're going to make sure that house is fully insured. So if you have damage to your house of $100,000, do you expect the insurance company to pay $50,000 because you were only half insured? Or do you want that company to pay you $100,000 because you were fully insured? Same thing with your car. Same thing with every other form of insurance policy. You want to be fully insured. You expect the insurance company to cover it fully, minus maybe a deductible. Same thing is true with life insurance. So don't reinvent the wheel. The actuaries of the life insurance company will tell you what your human life value is. You need to secure your full human life value. And by the way, no insurance company ever promises to make you whole. Okay? So if, God forbid, you die and your family inherits that death benefit, they are not being made fully whole. They're still suffering a loss, financially speaking, but it's now a manageable loss. Just like if you have a homeowner's insurance policy, maybe you have a $1,000 deductible on that policy. So if something happens to your house, you still have to come out of pocket $1,000. So you're still suffering a loss, but it's a manageable loss. And the insurance company does that on purpose, whether you're talking about life insurance or homeowner's insurance or whatever, because they don't want you to be incentivized to file a claim. So you're still suffering a loss, but it's a manageable loss. No insurance company ever promises to make you fully whole. It's not a realistic promise. They simply promise to protect you according to the terms of the contract, which means keep your loss to something manageable. So a $1,000 loss is manageable. A $100,000 loss is not manageable. So you need to secure your full human life value. And it's not just protection, it's securing your future net worth. And we'll get to that in a second. The other really important thing that you need to do is to protect your insurability. Let's say your full human life value is $3 million. And let's say you're a believer in the infinite banking concept. You want to do this, okay? The first whole life policy you take out, maybe it only has $1 million death benefit. So now of that $3 million, you only have $1 million. And so let's say you didn't do term. You just have a whole life policy in force. You say, I don't care about the death benefit. I just care about the cash value. Okay. So now you're paying, I'm just making these numbers up. This depends on you. Let's say you're paying a $25,000 premium in your whole life policy because that's what makes sense for you. And that comes with $1 million death benefit. Then 2 or 3 years later, you're doing really well. Your income has gone up. Your assets has gone up. You've gotten promoted at work. Maybe you started a business and it's growing. Your investments are doing well. You're super excited and you're ready to take out the next whole life policy. You're ready to expand your banking system. You want to put another $25,000 a year into your infinite banking system. Great. So you go back to the agent who sold you the first whole life policy. You're excited. You sign up for the next one and you get declined because you're not insurable anymore. Maybe something happened to your health that you didn't know about, or maybe you did know about it. Maybe something happened to a family member's health. It might not even be you. They look at family history. If one of your siblings has an alcohol problem and gets hospitalized as a result, that'll come up. What about your driving record? That comes up. It's easy for you, or relatively easy for you to get, say, a reckless driving charge. Maybe you're driving 20 miles above the speed limit. You're going 75 in a 55. In some states, that could be classified as reckless driving. That will come up and make you uninsurable, at least for a period of time. Or maybe you're just insurable at a lower rate. Maybe you got the preferred rating, but now you only get standard because you gained a few pounds. Or maybe you develop type 2 diabetes or high blood pressure or high cholesterol, things that are not life-threatening, don't really affect your lifestyle too much, but it affects your rating. You want to secure the guaranteed future right to purchase whole life policies. There's no guarantee of anything in the future. This is why convertible term, it's not a supplement to your infinite banking system. It's part of your infinite banking system. The purpose of case design is to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. Let me say that again. The purpose of case design with infinite banking is to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. Guess what? If you're not healthy, you cannot pay any premium because you cannot qualify for a policy unless you already had a convertible term policy in force. And now you can convert it without underwriting. This is super important, super important. Nobody believes me when I tell them this, but it is possible that something negative could happen to your health. So that $25,000, let's say, that you were ready to pay into a policy, what you should have done is taken out a convertible term policy for the full $3 million on day one. And let's say that cost $1,000 a year. And then on day two, you convert it and pay $24,000 now into your whole life policy with a slightly smaller death benefit. But now you still have that remaining $2 million of death benefit. And then when you come back and you're ready to expand your system, now you can, even if you're uninsurable. So you always want to be fully insured. You always want to have the full death benefit protection, which means for most people, you're going to need a combination of convertible term and whole life insurance. And it probably starts off with just 100% convertible term. Okay. And that way you're good to go no matter what happens to you. Again, there are exceptions to this rule. Just want to be clear. There are exceptions where maybe you only have whole life insurance, or maybe you apply directly for whole life insurance policies, or even other forms of life insurance. I'm not setting out a hard and fast rule. It's just a rule of thumb. But if your agent isn't even talking about these things with you, isn't even telling you what your human life value is, isn't even talking about why you should secure your full human life value, why we need convertible term, then maybe you need to find another agent. And infinite banking is not just about the cash value. It's also about the death benefit, because the cash value comes from the death benefit. Okay. The death benefit is the asset. If you're a real estate investor and you buy a house and you say, look, I don't care about the house. I'm not emotionally attached to the house. I'm not going to live in the house. It's just an investment. I care about the rental income I'm getting from it. I care about how I can leverage it. I care about the tax benefits it's giving me. I care about the capital appreciation. Okay, great. All that is great. But you know what? Without the house, there is none of that. The house is the asset. The house is what enables you to then rent it out and get rental income and then borrow against it and then watch it appreciate in value. With whole life insurance, the death benefit is the asset. Without the death benefit, there is no cash value. There is no policy loan feature. There is no long-term care protection. There are no tax benefits. There is no creditor protection. The death benefit is the asset. So you need to secure as much death benefit as possible. And in most cases, the best way to do that, usually the only way to do that realistically, is with convertible term. And there's a lot of nuance to even convertible term. When you take out a convertible term policy, you're not just protecting your family, you're securing your future net worth, right? So step one, let's go back to that 3 million number. When you take out a convertible term policy for $3 million, you have taken your first step to being worth $3 million on a guaranteed basis. Okay, so the first thing you do is you secure your future $3 million net worth by purchasing convertible term. Then the next thing you do is you make that death benefit permanent. So over time, you convert it, eventually all of it, to $3 million of permanent death benefit. So now that $3 million is guaranteed. Dead or alive, you will be worth $3 million at some point in the future. And then eventually that $3 million becomes liquid as the cash value grows. Okay, as the cash value grows. Death benefit is the future value of your cash value. I was thinking about this. Okay, cash value is the net present value of that future death benefit. Okay, but think about that in the inverse. That means that death benefit is the future value of your cash value. Think about that. This is mind-blowing. The death benefit is the future value of your cash value. So if you're saying, I don't care about death benefit, I only care about the cash value, that's a nonsensical statement. Those two are not separable. Those two are not separable. Really important to understand, death benefit is part of your system. That's where everything flows from. That's where everything flows from. Even if you're not married and you have no children, you're not worried about that. Still, the death benefit is securing your future net worth. So the death benefit is the future value of your cash value. And it will get there on a guaranteed basis, dead or alive. Either you'll get that $3 million, it'll become liquid over time as the cash value grows, and you'll have $3 million worth of cash value available to you to borrow while that still keeps earning for you. Or God forbid you die, and now your estate is worth $3 million. And someone that you care about, some cause that you care about, your children, your spouse, your business partner, charity, whoever, is getting $3 million tax-free, hopefully. So a convertible term policy with the right company and the right agent, what's important is not only that you have term that is convertible, well, what's it convertible to? That's what's super important. The conversion privilege needs to be worth something. And then how much death benefit are you getting? And how long is the term policy? These are important things to figure out too. If your human life value is $3 million, then in my opinion, you should have $3 million worth of life insurance. So there's a calculation to get to that $3 million figure. If you want to learn more, talk to me. Okay. But then also, how long is the term? You could have a 10-year term, 15-year term, 20-year term, 30-year term, right? There's a lot of nuance there. There's a strategy known as laddering, where we ladder term policies. Or maybe of that $3 million, we say we'll have a $1 million 10-year term policy because we're going to convert that $1 million fairly quickly. And then we'll have a $2 million 20-year term policy because it might take us longer to convert that. And we want to make sure we have enough time to convert it. We want to make sure we're protected as long as our children are still in the house or whatever, right? And the reason for doing that is it reduces the overall cost to the customer, right? Because a 10-year term policy is less expensive than a 20-year term policy for obvious reasons, right? I always start with giving you full options. So a 30-year term policy gives you maximum optionality. And if you end up converting it within the first 5 years or so, okay, you paid some extra in term premiums. Not a big deal, right? But if it takes you longer to convert it, you'll be glad you took out a 30-year term policy. And there could be lots of reasons why it might take you 10, 20 years before you convert all of it. Because what might happen is you might say, okay, I'm ready. Let's say it's only been 2 years. Okay, I have this convertible term policy in force. I'm ready for my next policy. But you know what? I actually want to take out policies on my children first, right? So then I take out policies on my children. Then maybe I take out a policy on my spouse. So maybe I don't convert my own policy first. It's not that I didn't have the money to do it. It's more that I just decided taking out policies on other people was a higher priority. And so now I'm glad I have the optionality because it might take me more than 10 years, right? So again, it gives you more optionality. If you end up converting it quickly, that wasn't wasted money, right? Which brings me to my next point. I talked about taking out policies on children, spouses, grandchildren, business partners. Guess what? The amount of death benefit, the amount of coverage you can get on another person is dependent on how much you have on yourself in most cases. So if I want to take out a policy on my children, I need a lot of death benefit because death benefit on a child is very cheap, very inexpensive, as you can imagine. Which ironically, from an infinite banking standpoint, is bad because what it means is it's hard to put a lot of premium into a juvenile policy. It's hard, right? So you want to make sure you have a high amount of death benefit on yourself so you can take that out on your children. So if you have $3 million on yourself, your children are only eligible typically for $1.5 million. Sometimes you can go higher, right? And a $1.5 million whole life policy on a child is not going to allow a whole lot of premium to go into it. Okay, it still makes sense to do it because children have the advantage of the passage of time, so that policy will be in force for so much longer, right? So that's another thing that having yourself fully insured will do. Not only does it give you full optionality on yourself, it gives you more optionality to take out policies on other people, assuming they're healthy and can qualify. Okay, so again, the conversion privilege on that convertible term policy is very important. What is it convertible to? It has to be with the right company in the right agent. And you have to look at again, there's a lot of nuance here. Some convertible term policies have limitations that may not be obvious. Sometimes they're limitations based on age or other factors. Sometimes the conversion period is not the same as the term period. As an example, you might have a 20-year term policy. So that policy will stay in force for 20 years. But the conversion period is only the first 10 years. So it's only convertible for 10 years, even though the policy is a 20-year policy. So again, there are lots of nuances here. A good agent is not going to lose you in all the details of this. And the purpose of this video is not to lose you in the details of convertible term, but to illustrate for you the importance of working with a good agent who understands these things And he's not going to waste your time with all these details, but he is going to give you the solution that makes the most sense for you. Not all whole life insurance policies are created equal. Certainly not all term policies are created equal, right? So what is that conversion privilege worth? What's it convertible to? And what are the limitations on conversion? Another really important factor is design limitations. So you can take out a convertible term policy with a really good mutual company that has great products for infinite banking. And then when you go to convert it, you find out, oh, they won't let you do that. You can convert it to our whole life policy, yes, but we will not let you design it for infinite banking. There are limitations. I don't want to get into all those nuances, but many of the good companies that have good whole life policies, if you apply directly for a whole life policy, you can design it however you want. But if it's a term conversion, they limit you. So not only does it need to be a convertible term policy for the right death benefit amount with the right agent, and the right company means ones that does not limit how you design a policy when you convert it. So getting back to what I said earlier, that could be one of the reasons why you would want to apply for a whole life policy directly, right? Because there are companies out there that won't let you just convert however you want. So with those companies, you would have to apply directly for a whole life policy. So I just want to be clear, there's nothing wrong with that. There are cases where you would want to apply directly for a whole life policy. If for some reason you wanted that specific company, that's fine. Okay. Here's another nuance. When you convert it, you potentially use up more death benefit than you might think. So let's say we have that $3 million convertible term policy in force. We take out a whole life policy that has $1 million death benefit. So now we've converted the policy. We have $1 million whole life policy, and then we have a remaining $2 million in term, right? Wrong. Especially if we're doing infinite banking style policies, what you find is there's the starting death benefit on the whole life policy, and then there's what they call the total underwriting amount. So the amount of death benefit they're underwriting you for is not the same as the amount of death benefit that whole life policy has. Why? Because the death benefit grows over time. With your term policy, it's very straightforward. You have a $3 million death benefit. That's it. It's flat, it's level, it never grows. So the insurance company knows we just need to underwrite you for $3 million. That's our liability. That's it. With a whole life policy, it starts at $1 million, but it grows over time. The company will underwrite you for more than $1 million, which means when you do the term conversion, you might see you're not using up $1 million, you're using up $1.1 or $1.2 million of insurability. This is really important. You only have a limited amount of insurability. Don't act like you can just take out as many whole life policies whenever you want. You cannot. It's not only your health that will limit you, it's also your finances. The insurance company is not going to give you an unlimited amount of death benefit. That's why it's so important to secure it and use it wisely. This is why case design is so important. We need to use the very finite amount of death benefit that you're allowed and squeeze the maximum amount of value out of it. This is another reason why I'm not a huge fan of those skinny base premium case designs. Now I'm getting into some inside baseball, but some people will have really low base premium case designs where you have really high early cash value and it looks great because everyone can only think short term. Well, one of the problems, and there are many problems with those policies, one of the problems is that you're using up your insurability because now, I don't want to get too into it, but you end up using up more death benefit and not really using it very effectively. And the cash value looks nice until you try to take out your next policy. And with those super skinny base premium policies, there's a risk that the policy might become taxable. That's a big problem. That's getting into inside baseball on whole life case design. But the point that I'm making is, again, another nuance of term is that when you convert it, the amount of death benefit you use up, so to speak, is potentially more than the death benefit on the whole life policy. That's the way that whole life policies are underwritten. They're underwritten differently than term because the death benefit grows over time. So the insurance company is not underwriting you for just the starting death benefit. They're underwriting you for more than that. So again, this is just another nuance and why it's so important to be working with a good agent. Even term has a ton of nuance, not to mention whole life. And I'm saying a good agent stays on top of this too. I'm living and breathing it. I saw this a lot in the working world. There's a big difference between understanding something versus living and breathing it every day. because if you're not living and breathing it, your knowledge becomes stale very quickly. There's also a convenience factor too. Let's say you are perfectly healthy, right? You have your convertible term in force, you're perfectly healthy, so you could have applied for a whole life policy. Even if you could, still, the fact that you don't have to go through underwriting again is a huge benefit. Underwriting can be a bit of a pain. Think about the last time you bought a house and took out a mortgage. The mortgage company will underwrite you for that loan, and that can be a painful process. You don't want to go through that any more than you have to. You're doing it because it's worth it. You're buying a house, so it's a big purchase. It's worth it. Same thing here. You're starting your infinite banking system. It's totally worth it. So why would you want to go through underwriting any more than you absolutely have to? It can take 1 to 2 months to go through underwriting, depending on the company, depending on your age, health, the amount of death benefit. They'll put you through a medical exam. They'll take height, weight, blood pressure, a blood sample, and a urine sample. They'll pull your medical records. They may come back with questions on your prescription history. They may need to get an attending physician statement from specialists that you've seen. They'll pull up things you had forgotten about. So why would you want to go through that pain any more than you have to? If you secure your full human life value with a convertible term policy, then when we go to convert it, you don't have to go through underwriting. It's just a simple conversion process. There is a process. There's a little bit of paperwork, but it's very easy. Really, you're just telling them what policy do you want to convert it to? And do you want to keep the residual death benefit in term in force, or you want to just drop the term? Of course, we're going to keep that death benefit in force. Even if you are perfectly healthy, there's still a huge benefit to having convertible term, because now those subsequent policies, it's just a conversion process. It's not going through underwriting again. How about convertible term with living benefits? Here's another huge nuance. Some convertible term policies have living benefits, some do not. Many of the policies that have convertible term with living benefits are with companies where the conversion privilege, in my opinion, is not great because the policies they have are not great. But there is value to having living benefits. And by that, what we mean is that death benefit can be used in the event of a long-term care need. And depending on how much value you place on the long-term care protection, that can be a very inexpensive way to get some form of long-term care protection. They'll also give you an accelerated death benefit where if you get diagnosed with a terminal illness, you can start advancing yourself that death benefit. Chris Kirkpatrick, he always talks about the story of his father-in-law. Now, this was a whole life policy, not a convertible term policy, but there are convertible term policies now who have living benefits, where he was diagnosed with a terminal illness, stage 4 pancreatic cancer. He was given less than 90 days to live. Because he had a whole life policy, he advanced himself multiple 6 figures worth of that death benefit to go and spend on alternative treatments that health insurance was never going to cover. 2 years later, he's playing golf 4 days a week and playing with his grandchildren because of that accelerated death benefit. He got diagnosed with a terminal illness. He used that accelerated death benefit to get all kinds of treatment he couldn't have gotten otherwise. And now he's alive 2 years later and still living a relatively full, healthy, happy life. There's even some nuance there I'm going to get into. How do they discount the death benefit? So if you have $1 million death benefit, you might think I have $1 million that can be used for long-term care. Well, not exactly. It depends on what discount method they use. So when you advance yourself that death benefit, some companies use what they call the lien-based method. So if I use $100,000 of that $1 million death benefit, I'm left with $900,000 of death benefit. Exactly what you'd expect. Others use a discounted cash flow method, where if I use $100,000 of that death benefit, there's not $900,000 left. There might be only $500,000 or less, okay? There are limits too. How much can you advance yourself? Typically not all of it. Typically they limit it maybe to a monthly or annual amount. All of these are nuances that a good agent is going to understand, right? So again, I'm just reemphasizing why convertible term is really important and how there are so many nuances, even to term life insurance. But I love convertible term because it gives you so much optionality. It's the most inexpensive way to get the maximum amount of optionality. I love convertible term. It's a great solution for so many people. If you're going to do infinite banking, this is your guaranteed purchase option to do infinite banking in the future as much as you want. If you just take out the whole life policy, there's no guarantee you can expand your system in the future. It's going to depend on underwriting. And underwriting is not just medical, it's also financial and personal. They look at a lot of different factors. Maybe your rating changes. Maybe the amount of death benefit you're eligible has gone down because your income has gone down. Or if your age goes up, same thing could happen. Maybe your income didn't go down, but if you're older, the actuarial calculation changes and maybe your human life value is now less. So for all those reasons, a good agent is going to tell you what your human life value is, first of all. And he's going to explain to you why you need to secure your full human life value. And I even know agents who will do the following. They will tell you what your full human life value is. Let's say it's $3 million. And they're going to recommend that you take out $3 million of death benefit one way or another. And let's say you decide, nah, I don't want to do that. Let's just take out this $1 million term policy. I don't need $3 million. Or maybe you say, I don't care about death benefit. Let's just take out a whole life policy that I have $1 million death benefit. The agent will say, okay, if that's what you want, that's fine. But here, I need you to sign this paperwork. I need you to sign a form that says, my agent has explained to me that I am eligible for $3 million of coverage, but I'm declining that, and I'm just taking $1 million, signed and dated. And then when you die and your widow is now ruined because she only has $1 million instead of 3, and she goes to sue the agent for malpractice, the agent can pull up the paperwork and say, nope, I explained to him. I explained to your husband he was eligible for $3 million, but he decided to be irresponsible and only take out $1 million. And I'm sorry you're ruined, but I did the best I could. So you cannot sue me. I'm not liable. It wasn't malpractice. I did what I could. There's a good video by Tom Hegna entitled The Widow Who Thought She Was a Millionaire. $1 million sounds like a lot of money. I'm telling you, when it comes to life insurance, it's not much. How is your wife and 4 children going to live off $1 million for the rest of their lives? Forget it. There's no way. There's no way. You need to secure your full human life value. Very important. How about riders on term policies? Here's another nuance. You have your term policy, but just like with whole life, you can add riders to that term policy. As an example, you can add a child term rider. What that does is it gives you coverage on your children. Why is this important? First of all, with a child term rider, the amount of death benefit they're going to give you on your child is going to be minimal. Let's say it's $25,000. God forbid they die, it would cover the funeral. Okay. More importantly, what happens is the children have the right to convert that $25,000 to 5 times that amount all the way up to age 23. So if your child becomes uninsurable or has some health issues, they can still get access to at least some form of permanent life insurance without underwriting. It's like taking out a really small convertible term policy on your child. You've protected $125,000 worth of their insurability. That's phenomenal. And as you can imagine, these child term riders are extremely inexpensive. It'll be like $10 a month. Here's another thing. Again, everything I'm telling you is subject to change, but the basic concept is the same. No matter how many children you have, the cost is the same. So if you have 8 children, it's still that same $10 a month. And it covers all of them. And it will cover new children. So when you adopt or give birth to a child, just make sure you tell the insurance company each time they're automatically grandfathered in. Doesn't matter how unhealthy that child is, they're automatically grandfathered in, which is a huge, huge benefit. I had a little sister. She only lived 9 days. They didn't know this until late in the pregnancy. She was born with a severe brain defect. They only expected her to live a couple of hours. Baby was born, baptized immediately. We all came and held the baby and never expected to see the baby again. But the baby, her name was Mary Caroline. She ended up living 9 days, which was more than anyone expected, despite the fact that she had very little brain. And, you know, that's the sort of thing that can happen. But anyway, I've also, so we'll get to convertible term policies on children. That's another thing we'll get to. So a child term rider is something you can add. I think that's a great thing to do. It's very inexpensive. Accidental death as well will add an additional death benefit. If you die in an accident, I think maybe $250,000 or so. The logic behind that, I think, is if you get into an accident, there can be more costs associated with it, and potentially you're dying younger, so you need more money. Disability waiver premium is another rider you can add. So if you become totally disabled and unable to work, the premiums are now waived, and you're still protected by that death benefit. And There's even disability waiver premium with automatic conversion. That means your policy, not only is the premium waived if you're disabled, but the policy gets automatically converted to a whole life policy. That's pretty amazing when you think about it. When you think about that rider, that's really incredible that you could have a free whole life policy on you when you become disabled. Pretty amazing. Pretty amazing. These are the sorts of riders you can put on a convertible term policy. It protects you in so many different ways. It gives you so many different options. So term has a lot of nuance, and there's nuances I'm not getting into in this video. Convertible term on children. Protect your own insurability, but protect your child's insurability too. There are some companies that have good competitive whole life products that will do convertible term on children. Come talk to me. So you can take out a convertible term. You can do a 60-year convertible term policy on a child. It's amazing. You've protected their insurability, and now you can decide what to do with that death benefit. As you can imagine, death benefit on children is pretty inexpensive. This is why it's so important to have the maximum death benefit on yourself, because how much convertible term you can take out on your child is limited to half, 50% of what you have on yourself. Every parent should do this for their children. If you love your children, you should do this for them. That way, if something happens to their health, they will still have options. I know someone who lost his insurability at age 4. He had meningitis and needed open heart surgery. Not insurable. What if his parents had done the right thing and protected his insurability while he was little? I did an application on life insurance for someone's 2-year-old daughter. She was declined. This stuff happens. Why take a chance? Why take a chance? You fully insure your house, and you would never think of doing anything less. How would you feel if you had no homeowner's insurance? What if you had a $50,000 car and no car insurance? How would you feel driving that car around? You'd want to go and get it covered. Yet, when it comes to the most important asset that we all possess, our life, our ability to earn income for a family, we don't protect it. Why? Why do you think this way? Sell your house, sell your car, so you can then afford life insurance. Don't tell me you cannot afford it. If you're telling me you cannot afford a good convertible term policy for your full human life value, then I'm telling you, you have a problem with your priorities. We can find the money. It's just a matter of priorities. By the way, with my cash flow optimization exercise, I have never failed to find anyone an extra $300 a month in income. $300 a month minimum. We can do it, not by sacrificing your lifestyle or anything. But really, if you're telling me you cannot afford convertible term for your full human life value and your spouse too, then if you own a house, you should sell it, start renting, so we can now buy that convertible term policy. If you have a car, sell it, figure something else out, Uber it. This is more important. Of course you can afford it. It's just a matter of priorities. And I can find the money for you. Come talk to me. I'll find the money so we can take it out with no additional out-of-pocket expense to you. From the money that I'll save you by optimizing your cash flow, we can pay for the term policy without increasing your total out-of-pocket expenses every month. So as you can see, there is a ton of nuance, even with term policies. This just shows the importance of working with a good agent who can help you navigate all this. I'm not going to go super deep into the details with you unless you want me to, but I am going to understand your situation and present you with the right solution for you. And I'll handle all these nuances, all these details. So some people think term is simple. Maybe in some cases it is a simple product. That doesn't mean there's not a lot of nuance and complexity that goes into designing it. Don't try to do it yourself or think you know everything. A good agent is not an order taker. He's going to advise you, help him to understand what you're trying to accomplish, and then he'll advise you on the best way to do it. And probably you can do it in a less expensive, more optimized way than you thought if you let the agent advise you. If you just come in and say, hey, I need a $500,000 term policy, a good agent is going to say, where'd that $500,000 number from? Like I had a friend of mine, he says, hey, yeah, I need to take out a $500,000 term policy on my wife. And I'm thinking, okay, where'd that number come from? 500,000? Like, what are you talking about? So that was years ago, and surprise, surprise, he still hasn't done anything. Be respectful of the agent's time. Yes, do your own research for sure, but you need to work with an expert, a real expert, not the fake ones that you see all over social media, a real one, and which is hard to find, I'll grant you, because the best experts are not necessarily the best at marketing themselves. But you can tell that as you're interacting with the agent, whether he's a good one or not. If you want to do infinite banking, understand that is a specialty. If you really truly want to do infinite banking, work with an infinite banking specialist. Don't just grab a random life insurance agent. Don't grab a financial advisor. He does investments. He doesn't do life insurance. Yeah, he may have a life license, but he doesn't understand any of this. Just like I have a health insurance license, but it would be ridiculous to claim that I know health insurance. That's why I bring in Brad Owens. So I can give you a full-fledged comprehensive solution, but not by myself. I'm the glue that puts all this together. I look big picture and find a good overall solution. But when it comes to health insurance, I bring in Brad Owens. When it comes to disability insurance, I bring in Ben Feigenbaum. When it comes to estate planning, I bring in an estate planning attorney that I work with so that we have a team. We have a team. I'm not an expert in everything. Work with someone who is an expert at that particular specialty. You don't go to your general doctor for heart surgery. You go to a heart surgeon. Secure your full human life value now. You can go ahead and take the step of applying for a convertible term policy while you're doing your research, while we're figuring out a final solution. We're going to put you through underwriting as step one. On day one, as soon as you're ready, done. We don't have to have a full-fledged solution, full case design done. All we're doing is applying for a policy, which means we're just putting you through underwriting. The insurance company isn't signing up for anything. You're not signing up for anything. We're just putting you through underwriting to see how much death benefit are they going to give you and what rating are they going to give you. And then I would recommend secure that full human life value. Now you have all your options on the table. And no matter what you decide to do, you'll be in a much better position. So I hope this was valuable just in terms of showing that even term life insurance has a tremendous amount of nuance to it, and the importance of working with a good agent who's going to explain to you your full human life value, how it's calculated, why you need to secure all of it, and why convertible term is such an important solution because it gives you optionality. Thanks for watching. If you want to learn more about your full human life value and convertible terms, schedule time with me. We'll talk soon, everyone. Bye-bye.